So if you only have a couple $100 and want to start scalping the Forex markets, you might be looking for some sort of trading strategy. And well, you lucky bugger, you definitely have found it. Today I'm going to show you a 1-minute Forex scalping strategy using a small trading account. So hopefully you guys can get some motivation to start Forex scalping with a small balance. Okay, so here's one of many trades I took using this trading strategy, and as you can see, it's actually performing really well, and absolutely nothing is stopping you to copy my trading strategy and use it to gain your own trading advantage. So what is this magical 1-minute trading strategy? Well, let's go inside the indicators tab and find out. So the first thing we're gonna need is 2 EMA lines. So if you just type in moving average exponential, it will be under the technicals tab, and probably it will also have this green little sign over here which actually says updated. I'm not sure what they updated, doesn't matter. Click on it 2 times and close off this tab. We will then hover our mouse to the perimeters of the exponential moving average, and we will change the length of 9 to 50. So 50, and click OK, and do exactly the same procedure for the other EMA line, but instead of 50 we will use 100. Click OK once done. You can also style your exponential moving average lines, so I'm just using this thickness over here. Click OK, and you will have 2 lovely moving average exponential lines on your charts. And this is a great start for a great trading strategy, trust me. Now we will need one more indicator. Use the indicators tab once again and type in stochastic. Once you've written down stochastics, under technicals it will have stochastic RSI. We will need this one, so click on it. Now hover down to the stochastic lines, double click on it, and it will open up the inputs tab. Follow along because we want to change a few parameters. Change the K from 3 to 5, leave D as it is, and RSI length to 3 as well. So 5, 3, 3, stochastic length 14. Doesn't matter, don't touch it, we don't need it. Click OK once done. Okay, lovely jubbly people. First thing we want to do with this trading strategy is actually analyze where the market is heading, right? So currently we are on the 1-minute time frame for EUR/USD, and we are seeing that the market is making new lower lows every single time. Market is pushing, exhausting, pushing, exhausting every single time, coming back to the previous area of sensitivity, pretty much moving towards the downside, upside, downside, upside, but every single time it pushes a little lower than before. And that's super important because then we know that it's pretty much a solid downtrend. Now that was on the 1-minute time frame. What we want to do is actually have a look at the 1-hour time frame and see how strong the trend actually is. So this is the 1-hour time frame, and as you can see, it has been trending down for a while. It currently had a little exhaustion towards the 50 moving averages, and what happened is started dipping down once again. Likely gonna retest one of these previous area zones. I would say that the trend is definitely bearish, so we want to be only trading bearish trades, right? Sell executions or sell orders. Okay, so back to the 1-minute time frame, and we now know that the market is definitely trending towards the downside. We need to wait for some sort of confirmation. What is the confirmation in general for selling orders? Well, we want to bounce off the 50 or 100 moving averages. Usually once it reaches the 50 is pretty good, but sometimes it does bounce off the 100 as well, sometimes in between them. So we need some sort of candlestick confirmation. Now, what is a candlestick confirmation? Well, ideally we want to be looking for a bearish engulfing candlestick, something like this, just over here. Developing would be really good. Now to confirm this trade even more, we really want the stochastic RSI to be overbought. That's a good confirmation to go short. So let's see if that actually happens and develops. Now look at this, boom. Very beautiful trade. It pushes towards the upside nicely. Where does it bounce off? The 2 moving averages, the 50 and 100. We are not scared that it broke the 50 moving average, because usually that's where the market actually decides to bounce back. And as you can see, we had a nice area of sensitivity in between the 2 moving averages, bearish engulfing candlestick as confirmation, and stochastic RSI has been overbought, right? So we know now that it could be a nice little trade towards the downside. So if we just short this position just off here, it could be a nice little trade. Now, for stop loss or take profit, what do we need? Well, we want to have stop loss just above the previous area sensitivity. So previous area sensitivity would be over here or here, right? And the two moving averages as well. This gives me good cover for the candlestick, so even if it bounces back, likely a lot of sell orders will be injected in that place near the moving averages and dip down, and that's what we want. And we do the same thing for take profit, so 1-to-1 risk to reward ratio just over here. That seems like a decent enough trade. Now, what you can do and what you should do, especially as a beginner trader, also mark areas of support and resistance. In this case, we have a resistance zone over here. Solid resistance zone because it bounced off the same area level as before. It's a great resistance. We can also mark the trend line. So if we mark something like this, that seems pretty good. Just over here. You can of course move the trend lines as you like as the market approaches to draw them more accurately, but drawing a trend line yourself is basically a rough estimate or a guide where the market likely could react next. So don't miss out on trend lines, guys. Seriously, I'm watching you. Okay, now that we have 1-to-1 risk to reward ratio, our trend line is here, our resistance is here, we have our stochastic RSI just over here, we have our bearish engulfing candlestick, we have our bounce confirmed of the 50 and 100 moving average. Likely this is good enough for me to enter this trade short, and if Forex gods blesses me, likely it's gonna be a nice and profitable trade. So let's see what happens. It shoots towards the downside, another bearish engulfing candlestick forms, struggles a little bit, and let's see what happens. It eventually breaks the area of sensitivity that was formed here and dipped towards the downside nicely. And this is what we like to see. This would have been a great trade, a very quick one. Because it's Euro USD, you would have had low spread difference, so the profit could have been quite big anyway, even though it's a 5 pip trade. So if you catch one of these with a decent enough lot size, you could have made quite a bit of money. I always preach that you should trade with the trend. However, this trading strategy can be done in the range markets, especially on Euro USD, and I really like it, and I'll show you why. So as we can see, the market is pretty much in a range, right? Every time it touches pretty much the top goes down, pretty much the bottom goes up. We did have a little bit of a drop over here, but nonetheless it's a ranging market. We can see it. It's easy to spot. So using what we learned already, what can we see? We can see a break of two moving averages, right? It's breaking towards the upside. How is it breaking? It's breaking with a bullish engulfing candlestick, right? It swallows the previous 3 candlesticks in this case. So it just shows that there is solid bullish movement at the moment. So what we can do is long this position, right? So if we long this position, pop it over here, do around 5 pips once again. Why 5 pips? Well, it's simple. We can see that the market has reached this level before. Likely it's going to retest it. If it does, it reaches our take profit level, right? Simple. Stop loss as well. As you can see, it dipped down before, never touched this area zone. So likely it's going to dip down, maybe pull back one more time. Also, we can start drawing our areas of sensitivity and trend lines as well. So if we draw our first trend line, look at this. Beautiful, nice little trend line going towards the upside. So even if the market does pull back, it could be pulling back around here somewhere, or maybe the 2 moving averages that we have under this candlestick over here as well. We can also spot that there is an area of sensitivity just over here. If we just draw this line, that's pretty damn good. So our take profit level is actually just below the resistance, so we should be safe and sound to take this trade, and likely it could be a nice little bullish trade for us to take. Last thing, stochastic at the moment oversold, which is good. We are going to buy, so we want it to be oversold, and that's a great little thing for us. So with all said and done, let's see how the trade performs. So it does dip down a little bit and does dip down once again, but slowly and surely it does reach our take profit level. And as you can see, we would have reached a nice take profit level just over here, closed our trade off, and it would have been a beautiful 5 pips for us to take from the forex market. So if you watched this video till the end, you probably have some interest in trading, and I do recommend joining our Discord community. You will definitely improve as a trader. And if not, and you just want to watch videos, that's fine. You might want to watch this video next because it's pretty damn solid.